and welcome to the newest episode of the Prosponsive Logistics Podcast. My name is Tim Griffin. I'm your host today, and with me I have Lisa Vranich. Lisa is the Regional Vice President of Avalon Risk Management. Welcome to the show, Lisa.
Hi, Tim. Thank you for having me. It's great to be here.
Well, I usually kick off these episodes just kind of, telling everyone a little bit about yourself. So why don't you tell us a little bit about your experience, your time with Avalon, anything that might relate to today's podcast, which we're talking about cargo insurance today.
Hi, Tim. Thank you so much for having me. It's great to be here. I guess I'm going to date myself a little bit, but I started my career in 1995 in Atlanta, providing insurance coverages to companies involved in both domestic and international freight. Then in 1998, I joined Avalon to open our Atlanta office. Avalon specializes in a variety of insurance coverages for the logistics industry. That is our specific focus. I think like many of us in this industry, we kind of randomly find ourselves in the logistics field. You're not really sure how you got there, but then it's suddenly 25 years later and we've made a career out of it. I guess there's just something that hooks us. For me, I think it's the complexity of the supply chain and all of the moving parts. I just really find it fascinating.
Absolutely. Well, thank you for joining us today, Lisa. I really appreciate you taking time for this. As I mentioned earlier, we're going to be talking about cargo insurance today. So I guess I'm going to kind of start with a little bit of a broad question and we can just kind of dive into the details after that. So I'm going to take it from the top here. We're going to start with a pretty broad question. So what is shipper's interest or all risk cargo insurance and why should we get it?
Well, I'd like to say first, Tim, I think that this entire discussion about cargo insurance is really important because the term cargo insurance can apply to so many things and several types of insurance. I know we're going to touch on those today, but shipper's interest or all risk cargo insurance is typically coverage that's going to be purchased by the owner of the goods to protect it from physical loss or damage. And from the shipper's perspective, it can be a benefit because the coverage is for the benefit of them and they're going to know exactly what is and what isn't covered when it comes to a loss. So, at the time of a claim, there are no surprises. They don't have to know what the carrier's policies cover or if they're using a broker, what the broker's policies cover. Typically, like I said, it's the shipper's coverage and it's going to be their own policy, but there is an opportunity for the broker to maintain what's called an open cargo policy. And that would allow the broker to sell all risk insurance on shipments that they handle for a shipper. And I think this could be a benefit to property brokers for many reasons. For instance, if a broker has high value loads in excess of their own contingent cargo limit, they don't have to turn those loads away if they had the ability to sell all risk insurance to the shipper. Another area where it might be beneficial to a broker to sell all risk insurance is if it is LTL freight. As you know, on LTL freight, the carriers are usually using a released valuation on the cargo. They may limit their liability to 10 cents a pound or 50 cents a pound. So while that carrier's insurance certificate might show $100,000 in motor truck cargo coverage, their policy is only going to pay out at that 10 cents or 50 cents a pound limitation. So this is a great opportunity for a broker to sell all risk coverage, which is going to respond with full value rather than an amount per pound.
So it's interesting that you say that because I thought carriers were already covered for shipments for loss, damage to any of the freight that they're carrying. Is that correct?
Well, technically carriers are typically liable for the full value and that's the expectation. The Carmack Amendment is a federal legislation that governs motor carriers and interstate shipments. And Carmack does say that the carriers have absolute liability for loss or damage to the cargo. That means they don't necessarily have to be negligent in causing damage to the cargo, but they have absolute liability. CARMAC does give carriers the ability to limit liability, like I just referenced with LTL carriers, but for the purposes of this question, we'll just keep it simple. So CARMAC does say that they have full responsibility, but they may not be able to fund that loss out of pocket. And so that's why they maintain motor truck cargo coverage. But the problem is that the cargo coverage they maintain may have exclusions in the policy. And so there could be situations where a commodity is excluded. And so therefore that policy is not going to respond to the loss. And so while the assumption out there is that the carrier will simply pay, that isn't always the case and not always what we experience. And then this is where the broker's contingent cargo coverage would need to come and kick in.
What about motor carriers cargo coverage? What kind of exclusions would you typically find in a carrier's motor truck cargo policy?
Well, this is a really important question, and I think something that dovetailing off of that last question, a lot of people don't understand. All motor truck cargo policies are different, and so they're all going to have different coverage, exclusions, and warranties. Some typical exclusions that you might see in a policy is they could have what's called an unattended vehicle warranty. This means if, let's say, there's a theft to cargo and it occurred when the driver went to a rest stop and stepped away from the vehicle, there's not going to be coverage in his cargo policy, in that motor carrier's cargo policy for that theft. There could be a TARP warranty. There could be an employee dishonesty exclusion, meaning if the driver steals the load, there's not going to be coverage if the motor carrier's policy, has that exclusion. There could be commodity. It could be a commodity specific policy. I've seen motor truck cargo policies that are just written for garments or building materials. And so you may inadvertently book a load with that carrier, and unless you can see the coverage in their policy and exactly all of the commodity exclusions or how it's written, you may not realize their certificate may show that they have $100,000 in cargo coverage, but the certificate doesn't tell you the specific commodities that the policy is written for, or that maybe the policy excludes. And then, of course, there are just the commodity exclusions. Many policies are going to exclude potentially refrigerated cargo or pharmaceuticals or copper or computer parts. Something that we have started to see a lot of recently is scheduled vehicle policies. And what this means is that the carrier's motor truck cargo policy says if a specific VIN is not scheduled onto that policy and listed on that policy as a covered vehicle, coverage would be denied. So if you have booked a load with the carrier and they use a vehicle that is not on that policy and a loss occurs, there will be no coverage. And like I said, this has become very common, I think, with insurance costs rising and the cost of everything rising. People are looking for ways to reduce premiums, and this is a way. If the policy is only going to respond to a certain set of scheduled vehicles, likely the premium is going to be, a bit reduced. So that's definitely a big red flag to look out for.
So even if the company is covered, that specific VIN is not covered. Is that right?
Yeah, absolutely. And I think, this brings up an important, an important question. It's one thing to check a carrier's insurance certificate for the limits. It's going to show you the insurance company. It's going to show you the limit of coverage they have, which is typically 100. Sometimes you see more, 100,000. But it's another thing to know what is included or excluded in their policy. Now, this is where it becomes really important to have a good contingent cargo policy, and that's the coverage that a property broker would maintain, so that it would be virtually impossible for a property broker to get a copy of and read the coverage of every single carrier that they book cargo with. So that's why it's important for you as a property broker to have a good comprehensive coverage where you understand all of the coverages and the exclusions and warranties, et cetera.
So are all these policies, inclusive of perishable items? It just seems like most of the shippers ask if we have reefer coverage. What's the case there?
Well, again, like we're discussing, there are lots of variations in contingent cargo coverage. Typically, the policy probably will not include coverage for refrigerated cargo unless you specifically ask for it. So to back up, it kind of helps to understand how the contingent cargo policy works. Typically, and again, all contingent cargo policies are going to be written a little bit differently, but find in a contingent cargo policy that spoilage and deterioration is excluded. So obviously that is going to exclude losses with regard to refrigerated or frozen goods. If you are moving reefer cargo, you need to have what's called a reefer endorsement. And what that endorsement says is it will add back coverage for spoilage or deterioration to perishable cargo, but only if there is a breakdown of the reefer unit. And that's an important thing to note, because I think when people say, do you have reefer coverage? What they think is that if you say yes, it means you've got coverage for any loss or damage that might happen to refrigerated cargo. But really what the endorsement says is, yes, if you have this endorsement, we will add back coverage for losses that are due to spoilage and deterioration, but only if there's a breakdown of the reefer unit. And then on top of that, some reefer clauses may have other exclusions. So even if the reefer unit did break down, it may say some other warranties must be met before coverage can trigger. So they may require that the carrier maintain monthly maintenance records on all units. So if the reefer unit breaks down, but they have not maintained and can show proof that they have monthly maintenance records, that policy may exclude coverage for that loss. That would actually be a really big burden on a broker to know and track if the carrier that they booked a load with is actually maintaining monthly maintenance records. Some policies may say that if an incorrect temperature was set on the reefer unit, and that is the cause, it isn't a breakdown that led to the loss of the cargo, but it was an incorrect setting, that could be excluded. Inadequate fuel supply, maintaining oil levels or refrigerant. There are a host of exclusions or requirements that may appear in that reefer clause that would be really important for the broker to be aware of. I think the most important thing too is if you have these exclusions or warranties, it doesn't mean you have bad coverage, you just need to be aware of it. And if that does exist, you want to make sure in your broker carrier agreements that you're pushing those requirements back onto the carrier. So if your contingent cargo policy with your reefer breakdown endorsement says your carriers have to maintain monthly maintenance records, you need to make sure that you are pushing that requirement via contract onto your carrier. Because in the event that you've got a loss and you've got to prove that, you want to make sure that that is pushed back onto your carrier.
Yeah, it definitely needs to be documented. And I'm glad you mentioned the part about the user error. That was going to be my next question was, would it, include the user error portion of controlling the reefer?
Well, like I said, it just depends on how your contingent cargo policy is written. So if it's actually setting it, oftentimes, then that would be the carrier's, potentially responsibility, then that may be excluded. Now, if it is communicating the temperature setting, so your shipper, let's say, sends you a load and they have certain temperature requirements that must be maintained, and you as the broker communicate that incorrectly to the carrier, that is potentially an errors and omissions coverage. And that is an important coverage that brokers should maintain. It's often part of sort of a packaged policy that might have contingent cargo and contingent auto, and also include errors and omissions. So, that is an important coverage too. These are things that the broker should absolutely be discussing with their insurance agent, potential claim scenarios and how their policies can respond, so that you feel comfortable about what is going to be covered.
Right. So, I mean, as with most things relating to insurance, you have to pay attention to all these exclusions. You have to get really granular with a lot of this stuff. So I do want to ask, and this one's a two-part question, really.
Okay.
So is there a holistic cargo policy that has no exclusions? What would be some of the more typical exclusions or policies that brokers, shippers, even carriers need to look out for or be aware of?
So sadly, I would have to say again, no, there's no cargo policy, any type of cargo policy, whether we're talking motor truck cargo, all risk cargo, contingent cargo. There isn't a policy that's going to just absolutely cover everything. There's always going to be conditions and some exclusions. Now, some are going to be broader than others. Again, I don't think that there's any bad insurance policy out there. There's just, you need to understand what's in the coverage. You could have a very limited coverage policy because maybe what you're shipping is very limited, and it's, you're not worried about losses, but you want to have a little bit of coverage. But it's just being aware of what is in your policy and what it covers. As far as typical exclusions that a contingent cargo policy may have, just like with the motor carrier's motor truck cargo policy, there's going to be all different types. You could have dishonest acts of the carrier exclusion, meaning, if that motor carrier or the driver is somehow involved in the loss, in the theft, or is colluding with someone, a third party perhaps, and that cargo disappears, that could be an exclusion on your contingent cargo policy. So as we discussed, that's often excluded on the carrier's cargo coverage. If you also have that exclusion and that freight disappears, and let's say the driver leaves with the freight and disappears and is never to be found, that could be an exclusion that could be very costly for you.
So Lisa, tell me a little bit about how people can get in touch with either you or Avalon.
Well, first, thank you so much for inviting me to speak with you today. If I could, I wanted to just share a really quick story as we wrap up. Just this week, I was speaking with a prospective freight broker client, and he said, "No offense, Lisa, but I hate insurance." And so I was thinking to myself, okay, I get it. You may not like insurance, but wow, hate is a really strong word. And so I said to him, "What is it that you hate about it so much?" And he said, "I feel like every time I call my insurance agent, I have to re-explain what my business does. They just don't get it." And so I said, I can see how that can be really frustrating, but I think you hate insurance because you're with the wrong insurance agent. I will say, seriously, it is very important for logistics companies to work with an insurance agency that specializes in their industry, that speaks their language. At Avalon, insuring logistics companies is all we do. And I would encourage people listening to get in touch with us. Let us do a review of your current insurance program. We are a nationwide agency, and you can find contact information for all of our offices across the U.S. on our website at avalonrisk.com. We would love an opportunity to change the minds of any insurance haters.
That's great, Lisa. Thank you so much for joining us today. I really appreciate you taking time out of your busy schedule
It's my pleasure.
It's been a great conversation. So I just really appreciate it. And I hope I get to talk to you again soon.
That sounds great. I'll come back anytime.
Thanks, Lisa.